The summer of 2020 marked a turning point for Ethereum that few could have predicted. In just 3 months, the total value locked in decentralized finance protocols skyrocketed from $1 billion to over $10 billion. Compound launched its governance token, triggering a wave of yield farming that saw users flock to platforms like Uniswap and Aave. This wasn't just growth. It was an explosion that would redefine Ethereum's purpose and test its limits. At the heart of this revolution was Uniswap, an automated market maker that allowed anyone to trade tokens without middlemen. Within weeks of its V2 launch, daily trading volumes surpassed $100 million. MakerDAO, Ethereum's pioneering stablecoin platform, saw its DAI supply double in a matter of months. The founders watched as their creation became the backbone of an entire parallel financial system, one where lending, trading and derivatives operated without banks or traditional institutions. Vitalik Buterin called it the most interesting thing to happen in crypto since Bitcoin. But others in the original team grew uneasy. The strain on Ethereum's infrastructure became immediately apparent. During peak activity, transaction fees sometimes exceeded $50, pricing out ordinary users. Network congestion meant simple trades could take hours to confirm. Gavin Wood, by then focused on Polkadot, publicly questioned whether Ethereum could scale to meet demand without compromising its decentralization. Meanwhile, Joseph Lubin's ConsenSys rapidly expanded its DeFi portfolio, backing projects like MetaMask and Infura that became critical infrastructure. The divide between Ethereum idealists and pragmatists widened as DeFi's success created new dilemmas. Data revealed staggering patterns. At one point, just 10 addresses controlled over 50% of all governance tokens in major DeFi protocols. This concentration of power directly contradicted the decentralized ethos Ethereum was built upon. Anonymous developers launched vampire attacks, siphoning liquidity from established platforms with token incentives. The original founders split over whether this was healthy competition or parasitic centralization. Some, like Anthony Iorio, warned of regulatory risks as billions flowed into unaudited smart contracts. Others saw DeFi's messy growth as proof of Ethereum's resilience. The numbers told a clear story. By December 2020, DeFi's total value locked hit $15 billion, just 6 months after crossing $1 billion. Over 1.2 million unique addresses interacted with DeFi protocols that year. Yet Layer 1 alternatives like Binance Smart Chain began gaining traction by offering lower fees, forcing Ethereum to confront its scaling limitations head-on. Vitalik's long-promised shift to proof-of-stake and sharding suddenly wasn't just philosophical. It became existential. Security breaches compounded the pressure. The $25 million DForce hack and $8 million BZX flash loan attacks exposed vulnerabilities that reminded everyone of the DIO. Unlike 2016, though, there would be no bailouts this time. DeFi's code is law ethos meant victims often lost funds permanently. This brutal accountability became both a selling point and a point of contention among Ethereum's fracturing founder group. By 2021, DeFi had birthed entirely new financial primitives, from algorithmic stablecoins to on-chain insurance markets. Uniswap's monthly volume briefly surpassed Coinbase's. Yet, for all its success, the ecosystem's dependence on centralized elements, from stablecoin issuers to infrastructure providers, left Ethereum at a crossroads. The very protocols meant to democratize finance were recreating hierarchies in new forms, with Ethereum's founders now spectators to the revolution they'd set in motion. As gas fees topped $200 during peak demand, even die-hard supporters acknowledged Ethereum couldn't remain unchanged. The network that once struggled to host crypto kitties now underpinned a $100 billion financial ecosystem. This tension between adoption and principles would define Ethereum's next chapter, one requiring technical solutions as radical as the white paper that started it all.